So quality walls in HUL have been in focus since about last week or 2 weeks ago, wherein they had that meeting, the HUL's board, and they have confirmed the split of the Quality Walls India business, the demerger, and the share entitlement ratio has been fixed as 1:1 with December 5 as the record date for eligible shareholders. After that, now we've today got an update, or rather late last night we've got an update from Quality Walls India, wherein they've given the update on their new management, what that looks like as they look to demerge the company. Mr. Prashant Premrajka, has been appointed as the CFO with effect of 1st December. Mr. Chitrank Goel has been appointed as the Deputy Managing Director for a term of 3 years till 30th November 2028. So that's on the management front. But from their presentation that they have released to the exchanges, here's what they have to say about India's ice cream market. They say that India's ice cream market is going in double digits, supported by the strong snacking market in India. India's ice cream business is a $2.6 billion market. So that's a massive total addressable market and a TAM of $26 billion. So very big growth potential is what they're seeing in the India ice cream market. Other than that, focusing on Quality Walls India specifically, it's the #1 across top 5 modern trade retailers, #3 of the top 5 global brands in India already with Quality Walls, Magnum and Cornetto. And looking ahead, they plan on bringing Ben & Jerry's, Viennetta and Yasso, some of their other brands, to India as well. They've moved from centralized to regionalized supply chain model, and pricing has been lowered or rejigged to make ice creams look more attractive to the Indian market. If you take a look at Quality Walls India presence at present, they have 2 lakh plus Quality Walls cabinets as well as the trikes, which is the bikes or the cycles or the carts on which ice creams are sold locally. And the spread of this is 30% each in north and south and 20% each in east and west of India. So very evenly distributed and strong demand from everywhere else. In terms of Quality Walls India's financials, the underlying sales growth has fallen from 12.6% to 6.5% in the first half of FY25 to 26. This is, of course, 12.6% is the CAGR growth over 20 to 25. UVG has also seen a similar decline. And if you take a look at the EBITDA margin for FY24 to 25, it was at 7%, which has fallen to absolutely nil in the first half of FY25 to the first half of FY26. The company has very candidly said that this is because of cocoa pricing, inflation, strategic pricing cuts that they have undertaken, GST transition, and of course the cost of being a standalone entity that has weighed on their margins this time around. Lastly, let's take a look at what lies ahead for Quality Walls India. They aim to grow ahead of the market. They aim to drive profitable expansion. They are also looking to invest behind capacity enhancement and productivity and point of sale expansion as well. They're aiming for improvement in return on capital employed and improving free cash flow, and EBITDA margin expansion is something that they're looking at 2026 onwards. So that's the take on Quality Walls India, soon to be demerged from Hindustan Unilever.